The January effect is an anomaly which was happening in the stock market in the late 1980s. Okay, so what was happening basically in the in the January effect is that the prices of these stocks and mainly small cap stocks. Okay, the prices of small cap stocks are tend to rise in price more in the month of January as comparison to any other month. Okay, now why that was happening? There are many theories behind it. Okay, one theory is tax loss harvesting. Okay, investors wanted to do tax loss harvesting. Okay, I already explained the concept of tax loss harvesting, in which investors try to have some losses, okay, so that they can reduce their tax. Okay, so they try to sell some they try to sell their stocks, mainly small cap stocks, okay, in the month of December. Okay, and especially when the prices are low and the prices are down. Okay, so that they can show some kind of losses. Okay, and then when the uh, tax year is gone in the month of January, they buy the stocks again in the month of January. Okay, that is why in the month of January the prices go a lot higher. Okay, there are other reasons as well, that because a new year is starting in the other theories as well. There are other theories as well behind the January effect, that because the new year is starting in the month of January, so people have more optimism and those things. So that is why people are buying small cap stocks at that time as well. Okay, this was not necessarily happening with the large cap stocks or mid cap stocks. Okay, but this kind of anomaly was highly visible uh, in the month of January. Okay, now at that time, in the 1980s, around that time, very few investors know about this, and that is why this anomaly seems to be working. Okay, very few investors know about this anomaly, that in the month of December prices are down, in the month of January prices are going up. Okay, so very few investors were buying these stocks in the month of January while other are selling. Okay, and they make profit in the month of January when the stock prices are high. Now, then what started happening, that more and more people started knowing about it. Okay, more and more people started knowing about it. So more and more people started buying in the month of December. Okay, now because of this reason, the anomaly slowly fade away. Okay, because more and more people are buying in the month of December, the prices are already high in the month of December, not in January. Okay, and sometimes this anomaly becomes so known that people are started buying in the started of December, in the mid November people started buying. Okay, so because of these reasons, the January effect, the anomaly faded away. Okay, and in today's time, when the market is so effective, when the investors are global, when there are global investors, and when there is so efficient way to get any information on any kind of pattern, if there is any available, that is very easily identified in today's efficient system. Okay, so that pattern fades away very quickly. Okay, and now in today's time, January effect is seen very little in very micro cap stocks. Okay, but that is not useful for anyone. Okay, so the point here is that even there are some these kind of patterns exist in the past. Okay, they only work when less people knew about it. Okay, and when more and more people knew about it, the pattern faded away. Okay, and as I said, in today's time the system is so efficient that these kind of patterns are easily identified. The information is very quick, the information spread very quickly, and these kind of patterns fade even before anyone can make profit out of it. Okay, so a lot of investors lost their money as well. Okay, because of this at that time. Okay, a lots of people lost money because of it. Okay, so these kind of patterns are seen a lot, and they fade a lot as well. Okay, there is a lot to learn from history as well. Okay, because in his book The Intelligent Investor, Sir Graham has said that don't try to go for these kind of anomalies and these kind of patterns here. Okay, Sir Graham has given uh, rules to follow when you are investing. Okay, and I'm learning a lot from this book here, The Intelligent Investor. This anomaly, this concept, the January fact, I also learned from this book here. Okay, and I hope you have learned something from this video as well. Okay, so always try to be uh, knowledgeable about all these things here. Okay, that just because something is happening, okay, doesn't mean it will happen for you as well. Okay, it can fade away, it can go away. Okay, the pattern can go away. Okay, whenever you are investing, okay, don't confuse investing with speculation. Okay, that is the important thing here. Okay, so yeah, thank you for watching.